loan recovery agents will no longer be able to harass you. RBI's big decision gives new power to the common customer. Imagine it's 9 at night. Your phone keeps ringing again and again. On the other side, there's a stern voice saying, "When will you pay the money?" You try to explain, but the person isn't ready to listen. The fear is that this call might reach your office or your relatives. The curiosity is whether banks or loan recovery agents really have so much power that they can make your life difficult. And the story matters because this fear may now finally come to an end. India's central bank, the Reserve Bank of India, has finally tightened its grip. February 6th, 2026, a Friday. The Monetary Policy Committee meeting concludes. The entire country was watching the repo rate, which was kept unchanged at 5.25%. But the real news wasn't just about interest rates. The real news was a major announcement regarding customer protection. RBI Governor Sanjay Malhotra clearly said that 3 new draft guidelines would be issued to provide better protection to customers. And this is where a new story begins. One where the customer is not just a borrower, but a citizen with rights. In the past few years, retail lending in India has grown rapidly. Personal loans, credit cards, buy now pay later, instant app loans. Easy credit everywhere. Digital platforms have made taking a loan a matter of minutes. But along with this, complaints about the recovery process have also increased. The number of consumer complaints reaching the RBI related to recovery agents' behavior, harassment and privacy breaches has been steadily rising. In many cases, agents were found making late-night calls, contacting relatives, or resorting to public humiliation. The RBI had earlier issued guidelines under the Fair Practices Code, clearly defining rules for recovery agents. No calls before 8 morning or after 7 night, no physical intimidation and respect for dignity. But in reality, these rules were often not followed. To bridge this gap, the RBI is now in a stricter mood. The first focus of the new draft guidelines is mis-selling. It has often been seen that banks or financial institutions sell products that do not match the customer's needs. The risk profile is different. The product is different. A high-risk investment plan sold to a senior citizen or a high-premium insurance policy sold to someone with limited income. The RBI is now making it clear that a suitability assessment will be mandatory. If a product is not sold according to the customer's needs and risk appetite, action can be taken against the institution. This rule is important because financial literacy in India is still uneven. Many people do not fully understand the terms and conditions. They sign the documents, the EMI starts, and later they realize that the product was beyond their capacity. The RBI wants banks to conduct a documented assessment before selling a product and keep proof that it was genuinely suitable. The second and most discussed rule concerns the behavior of loan recovery agents. Recovery will no longer be just about collecting money. It will also be about conduct and compliance. The RBI is proposing that banks and NBFCs ensure proper training, monitoring, and accountability of recovery agents. If complaints of harassment, coercion, or reputational damage are proven, penalties may be imposed on the institution. This means that if an agent threatens you, uses abusive language, or harasses your family, you can directly file a complaint under the grievance redressal mechanism. The RBI's focus is to ensure that the recovery process remains civilized and lawful. A borrower may default, but stripping away their dignity will not be acceptable. The third rule addresses the biggest concern of the digital age: unauthorized electronic transactions. With the growing use of online banking and UPI transactions, cases of digital fraud have also increased. The RBI had already issued a limited liability framework, but now it is preparing to make it clearer and stricter. If money is debited from your account without your knowledge and you inform the bank within the stipulated time, your liability will be limited to a certain amount. It has been indicated that under the proposed guidelines, customers may receive compensation of up to 25,000 rupees, provided they report the fraud within the prescribed time frame. This step brings relief, especially to those who fall victim to phishing calls, fake links, or OTP fraud. Regarding digital banking safety, the RBI has indicated that it may issue a discussion paper. This could include ideas like delayed credit mechanisms, additional authentication layers, and extra safeguards for high-risk users. Senior citizens may be placed in a special category, as they are considered more vulnerable to digital fraud. Possible measures could include transaction confirmation delays, higher transaction alerts, and biometric-based verification. Why are all these steps being taken? The answer is simple. India is rapidly becoming a digital economy. UPI transactions are crossing crores every month. Online payments have become common even in small towns and villages. But as convenience has increased, fraudsters have also found new methods. The RBI believes that without trust, a digital economy cannot sustain itself. In loan recovery cases too, the social impact is significant. Many borrowers are in genuine financial distress. Job loss, medical emergencies, or business slowdowns can lead to missed EMIs. In such situations, aggressive recovery tactics increase mental stress. In some tragic cases, extreme incidents linked to harassment have also surfaced. The RBI's new stance signals that there will be room for empathy within the financial system. At the same time, the responsibility of banks and NBFCs will increase. They will have to conduct background verification of recovery agents, provide proper training, and maintain call recordings. Complaint handling mechanisms will need to be strengthened. Internal audits may have to include recovery conduct as a parameter. Strict action against mis-selling will also bring changes to the insurance, mutual fund distribution, and structured products markets. Financial advisors will now have to focus not just on commission, but also on compliance. Suitability letters and customer acknowledgements may become mandatory. Short-term sales growth may slow down, but long-term trust will strengthen. The RBI's broader vision is clear. Financial inclusion along with financial protection. Jan-Dhan accounts were opened, digital payments expanded, and credit became accessible. Now the next step is to give institutional strength to consumer rights. This change will not happen overnight, but after public consultation, the draft guidelines could become final rules. An interesting aspect here is that the repo rate was kept unchanged at 5.25%. This means there will be no major immediate change in borrowing costs. But the policy tone makes it clear that the RBI is focusing not only on inflation control, but also equally on systemic fairness. In the future, recovery calls may follow regulated scripts, timelines for digital fraud reimbursements may be defined, and heavy penalties may be imposed in cases of mis-selling. Banks may have to increase investment in technology. AI-based fraud detection systems, real-time monitoring, and grievance dashboards could become essential. For the common customer, this means that if someone tries to sell you the wrong product, you have the right to question it. If a recovery agent crosses the line, you have a path to file a complaint. And if digital fraud happens, you are not completely helpless.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.